One of the things that the cost seg also does is you do have to have the criteria, but you're pulling forward. You're not erasing. We want to be very clear about that. You're not erasing anything. You're pulling forward money. And so what the idea here is that one of the toughest things to do is fund your next deal. Well, very often this can fund your next deal when you have the other criteria that you need, like a spouse that can do the time, or because you have your W-2 job. What's going on, everybody? It's Matt the Lumberjack Landlord here with his good buddy Dion from Dion Talk Financial Freedom. How's it going, pal?
I am doing marvelous. I'm excited to be here. I'd be more excited if we were crashing Zuber's cruise, but this will work.
There's going to be, I mean, probably not on the cruise, but if he ever does another thing like on the land, like you and I can just get the cabin next door. Just be like, hey, we're here to record. It's Wednesday. And then Olivia goes, shut the door.
Yeah, I'm in.
She's awesome. We love Olivia. But we're here. We want to talk about cost segregation study. It's that lovely time of year again. It is tax time. We want to talk about cost segs. Dion, you've made your feelings known for a long time about why no cost seg, because that would break the lazy model. But more importantly, it's because you don't have a number of the things that qualify, nor do you want to have a number of the things that qualify you for a cost segregation. So talk to us first about, for those of you who haven't seen, talk to us first about why no cost segregation studies.
So I will go over the two reasons why I haven't done a cost segregation study.
Mm-hmm.
Like I have two specific reasons and it isn't the amount of work, because to me, I probably wouldn't go to the website I think you pay $500 and do the cost seg yourself, basically.
It's
I
something
would
like
just
that.
hire somebody and go, hey, here's all my stuff. You do a
Oh,
cost seg.
sweet Lord.
Not even like it's a lot of work for me. But before I explain the two reasons why I haven't done a cost segregation, tell us about one of your cost segregations and how much money it can get you back and how much of an impact it can have on you, so that people can actually understand how crazy I am. That I shouldn't do one.
I think that's been established. Asked and answered, Your Honor. Asked and answered. The way that we look at the cost segregation studies is it's a way to essentially grab something called bonus depreciation. And so what we've done over the last few years with our cost segregation studies is right now, when you just normally depreciate a property, I believe everything, and again, not an accountant, but I believe that this is what it is. And Dan, you remember this stuff too. I believe that everything is basically depreciated over 27 and a half years for the most part. And so being depreciated over a 27 and a half year period, let's just make it real easy. And it's a $275,000 house. And so 10,000 bucks a year gets depreciated, and it's not a linear line. It does move, but you get the general point is that you basically get to depreciate that asset 10,000 bucks a year over that 27 and a half years. Now, in a cost segregation study, there's a couple things that have to be at play. One is you want to actually have a building that you say, I want to get the depreciation more front loaded. So instead of waiting 27 and a half years for that to play out, I want to get it where a majority of that house, maybe even upwards of 70 or 80% of that house, I can do something called bonus depreciation, which actually is going to take that from 27 and a half years to, it might take it all into year 1 or year 5 or 7. You have some flexibility about how you do your cost segregation study. But if we back it up a little bit, it's all based on really doing two things. The first thing is it is having the ability to access a product like DIY cost seg, which is how I do my cost segregations. A normal cost segregation, like Dion talked about, where he calls somebody up, goes, here you go. And then they go out to the location and do little measurements. And it's six or 8 weeks or 12 weeks later. And they go, hey, here's your bill for a $5,000 cost segregation study. And then Dion sends that cost segregation study to his accountant. The way that DIY cost seg does it is they have all of the questions that get looked at by a cost segregation study specialist. You fill out all of that information, and I can tell you all that information is available either on the deed, the tax card in most states, but all of that information is there. And if you ever have, what's cool is if you ever have trouble finding something, you can call them up and you can say, hey, here for that state, that's where you find it. But that cost segregation study allows you to take a lot more depreciation up front and get big, huge, massive tax refunds. Now, the caveat to that is You or your spouse have to be designated a real estate professional. Now, go ahead.
This is if you want the cost segregation to be used against your W-2 income. If you make a bunch of
Correct.
money from real estate, you don't have to be a real estate professional. You can use a cost segregation study against your rental income.
Yes, correct. So you can do it against your rental income, as Dion just said. But in a lot of cases in this community, there's at least one person in the relationship that's still working. And so that's what we looked at. We looked at it in the fact that Ashley was doing the books and she was doing a lot of the things for the business because I was working a 50 or 60-hour a week job. Well, I had all these taxes that I had to find a way to reduce my tax burden, and I had to do it legally. And cost segregation study was one of those ways. So she got deemed a real estate professional. And all that is a designation from a tax perspective. It's not a license, it's not a course, it's not paperwork you have to fill out. She was a real estate professional because she qualified with more than the 17 hours a week in the business doing the work for the business. She was in the business more than those 17 hours a week in order to be able to be classified a real estate professional. And then if you fast forward, so I go to the site, I fill out all the data, we decide how many properties we look at my income tax, we look at okay, what's the number of properties I need to do to kind of get that income tax wiped away? And that's the number of properties that we're going to do. And so we would then submit those, we would pay for those cost segregation studies. And by the way, 1000 lumber, if you guys use 1000 lumber, you actually get a discount on the cost segregation studies. So I would strongly recommend. I fought hard for that for you guys, but this is an open community. We want to share that with you. But 1000 lumber, they actually give you a reduced price. And what's really cool about it is we fill out our stuff, we get our cost segregation study within 24 hours, and then we just send that to our accountant. That's all we have to do. That's the long and the short of it. That's why we do cost segregation studies.
And the one thing that was missing there is with your job and the amount of money that you make and the cost segregation happening, I believe, correct me if I'm wrong,
Mhm.
you got a tax return of six figures.
Mhm.
Okay.
We did.
So that's how amazing a cost segregation study can be. You can offset your income that is taxed, because I said it in the earlier video, working for money is the dumbest way to make it. And then you used real estate to put money to work, you used a cost segregation study to offset what would have been a massive tax bill. Instead, you
Yes.
get a massive tax return of six figures.
Yes. Yes.
So here's the two reasons why. So the people who are watching hear how great cost segregation studies are. And if it applies to you, it's
Mhm.
like the LLC thing, right? It's not
Yes.
his opinion, but mine is if you have partners, you better have an LLC.
Absolutely.
No, I say you don't need one. If you get the benefits from a cost segregation study, you should probably do them. I had the last couple of years at my job, I was making a couple of $100,000 a year. So I made most of my years, I made 60 or 70 grand. And then the last two, I realized I was making more money off of rentals. So they started giving me actual pay increases and I was making good money. So a cost segregation study would be great to offset that. But I don't have a spouse who qualifies as a real estate professional. And the two criteria that I would have needed to qualify as a real estate professional didn't exist. It's 751 hours a year
Mhm.
working in real estate, and you work more in real estate than you do at your W-2.
That's right.
So if I did a cost segregation study, it could have been used against my rental income, but not my W-2. So I was lacking the big benefit that you got. And the
Agreed.
second thing is, so the way the cost segregation study works is this is the main reason as soon as you own a rental, you should hire a CPA because I don't want to know what these terms mean.
Amen.
You have amortized depreciation, scheduled depreciation, bonus depreciation, and probably a few others that I don't know about. I hire the CPA because he knows, or their team knows what all that stuff means. But a cost seg takes your 5, 10, and 15-year scheduled, not amortized, scheduled depreciation, does it all in year one. It ends up being about 25% of the total value of the depreciation that you could take over 27 and a half years. So you did all of these things will happen in year one. How many properties do I need to offset my full W-2 income, get my tax return? Brilliant strategy. Absolutely what you should have done. So I'm saying good job. I don't get the benefit against W-2,
Mhm.
and I'm still carrying forward a loss every year on my
Yes.
depreciation against my
Mhm.
rental income. So a bonus or the cost seg wouldn't, I would just carry forward a bigger loss that year.
Correct.
But here's the negative downside to the cost seg that has stopped
Mhm.
me because I don't qualify as a real estate pro. I'm now retired. I don't have the high income to offset the taxes on. Is I currently, on all of my properties, have 100% of my depreciation spread out over 27 and a half years.
Mhm.
Your portfolio is large enough to the few properties, however many it was, 5, 7, 10, that
Mhm.
you did the cost seg study on, only have 75% of the remaining depreciation spread out over 27
Correct.
and a half years.
Correct.
Your portfolio with doing buys and you just did a 1031, I'm not
Mhm.
doing any of that. It
Mhm.
totally makes sense. But for me, I kind of want the 100% of the depreciation because I don't really plan on buying enough to always have enough new
Sure.
depreciation schedules to offset my income. I'm going to buy one every couple of years. And some of them I might buy cash, some I might buy with a mortgage. If you buy with a mortgage, you're less likely to pay taxes because you have levered depreciation. If I
Mhm.
buy it all cash, I don't have levered depreciation, so the income might be high enough to where I make so much money I have to give some to the government, which is not a bad thing. So that's my opinion on it is if it fits your situation
Mhm.
and you will benefit from it, cost segregation studies are, and Matt is 100% right. DIY cost seg. Go to the website, get the 1,000 lumber discount,
Mhm.
do it yourself. I'm so lazy. If I didn't meet Matt, I would have just hired a cost seg guy, spent way too much money, don't get the benefit against my W-2, now don't have a W-2, and I would lose 25% depreciation over the length of my depreciation. So it doesn't fit my situation. That doesn't mean either one of us was right or wrong.
No, agreed.
It means we understood our situation. So in the comments
Yeah.
below, let us know your situation. Does a cost segregation study benefit you?
Yeah. The other thing to think about too is if, so Dion's got a really great performing portfolio, high returns, and it's a phenomenal portfolio. One of the things that the cost seg also does is you do have to have the criteria, but you're pulling forward. You're not erasing. We want to be very clear about that. You're not erasing anything. You're pulling forward money. And so what the idea here is that one of the toughest things to do is fund your next deal. Well, very often this can fund your next deal when you have the other criteria that you need, like a spouse that can do the time, or because you have your W-2 job. It's definitely worth investigating. We're gonna have a video on the channel shortly because people are putting together their stuff for their taxes. But yeah, cost segregation, there are definite pros and cons to it. It really just matters what your business is. But if you're one of those people that has a spouse that is not working a W-2, and that they can spend a majority of the time, on the stuff and do that, hit that 750 hours a year. If they are doing something like that or can do something like that, it can be the way that you make your down payment for your next purchase.
Awesome. With that, we're out of here. You can find the Lumberjack Landlords live streams every Thursday at 6 p.m. Pacific, mine on Tuesdays at 4 p.m. Pacific. And remember, boys and girls, you can't drink all day unless you start early.